Hey y'all, I'm Laura Richardson with Relevate, and we're bringing you another episode of our podcast series. And today we're talking about your top 8 questions on appraisals. So, the appraisal process is not as daunting as one might think, but it does have some nuances and some particular pieces that folks maybe don't know as much as they should, especially if some of these worst case scenarios that we're going to talk about happen to you. So, hopefully, this video can serve as a resource for you. But as always, make sure that you're in great communication with your local loan officer and you're talking in advance about what to expect in the appraisal process. So to get us started, what is an appraisal? So like when I hear that word, what does that even mean? An appraisal is essentially just the home's value per a licensed appraiser. So keep in mind, when we're talking numbers here, there's actually a few values that we might consider. So one of them being the list price of the home, the second one being the purchase price, which in our market can be very different from the list price. That's the agreed upon value in the contract. Then you have the buyer's appraisal, which is the one we're talking about today, which is a part of the lending process. This is how your lender knows the value of the home. And then you might have some other numbers in there, like the tax value. Maybe the seller got an appraisal before they went to market. That could still even be a different value. And then you get into some of those third-party sites and what their valuation can be, which can also be off from what we would value a home at per comparables. So think about it like this. An appraiser's sole duty is to come up with a fair and accurate value of the home. And then this is what's used throughout your loan process. So the second question is, do I even have to get an appraisal? If you're getting a mortgage, yes, you do have to get an appraisal. Your lender is going to require this as a part of the process, and it does have to be received in order to move along in the loan process. An appraisal, as far as the window of time and how long it takes, it can definitely vary because it does depend on how busy the market is. And also, if you're using a particular type of loan product, you might need an appraiser that does those types of loans, like a VA loan, for example. So it's important to understand this phrase LTV, loan to value. The loan to value is going to hinge on what that appraisal says as far as what the home is worth. Now, if you're buying a home in cash, you do not have to have an appraisal done. You can just assume that the purchase price is now the new value of the home. You're more than welcome to go down that rabbit hole if you'd like, but it is definitely not expected and can be a way to keep that money in your pocket. So what is an appraiser even looking at? Well, appraisers take different approaches to the process, but one of the things that they're definitely going to be doing is looking at sold properties, meaning they have closed. The proof is in the pudding. We know how it turned out. They're going to be pulling those and looking for something called comparables. Keep in mind, a comparable or a comp, as we call it, is not the same as area movement. There are certain parameters they look for to consider something as a comp. It has to be similar in a lot of different characteristics, like condition, the renovations, improvements that have been made, the amenities, locations, size of the home, the number of bed, bathroom, garage space, the acreage. There's a lot of different things that they look for to find the best representation in the market in a closer, or at least as close as possible, proximity to the subject home, and also recent closing. So we really try to shoot within the last 6 months, but up to a year in most cases. So keep in mind too, if you're buying in an area where there hasn't been a lot of transactions that have occurred, or if it's a time period in the market where maybe things haven't kind of kept up with the same pace, sometimes these appraisals can get a little stretched. So it's really important on the front end, before you go under contract on a home, you're kind of trying to follow that appraisal process and pull that information. So another big question is, do appraisals take place in person? Well, typically they do, where you have the appraiser physically go to the property, walk everything, and then they physically go and do at least a drive-by of some of the comparable homes. However, there now, because technology has definitely pushed things in a different direction, we do have hybrid appraisals, or even what's known as a desktop appraisal. So it really depends on your lender and what they require. So another big question is my agent allowed to communicate with the appraiser? They are allowed to communicate with the appraiser, but it can only be about facts of the home or about the contract. It is not about just their interpretation of the property or trying to sway them in any way. Obviously, we have to keep everything fair and accurate. So another big one, what happens if the appraised value comes back and it is not where the purchase price is? Well, in the best case scenario, you have a purchase price, so what you've agreed to pay for the home, and the appraisal comes in higher than that. That's equity that has now been built that you're walking into the home with. So that's always a positive. Then in some cases, the appraisal comes in right there at the purchase price, which actually does happen sometimes within a few dollars. That's fine too. Then the next one is what we call an appraisal gap, where you have the appraisal come in below where the purchase price is. If that happens and we have an appraisal gap, first things first, you got to look at what your contract says. Does the contract say that if the home does not appraise to the purchase price, what happens to the purchase price? There are certain things like a VA loan, for example, VA and FHA, you sign a special addendum that says if the home doesn't appraise, the seller has the right to either drop the purchase price to the appraised value, or they have to return all earnest deposits back to the buyer. Keep in mind, here in North Carolina, we have due diligence that does not come back to you, in addition to the fact that you've now probably lost some inspection money and things like that as well. So that's one agreed upon route. What if you didn't have some special addendum that said that that purchase price was going to change? Well, you, the buyer, are now on the hook for the difference. So let's give kind of a number scenario here. Let's say you agreed to pay $300,000 for the house and the appraisal comes in at $290,000. That's a $10,000 gap. So your lender is only going to lend you money based off of the $290,000, not the $300,000, meaning there's a $10,000 amount you now have to bring to the closing table. So what are your options here? Well, one of the options would be, instead of bringing, let's say, a 10% down payment, you bring a 5%. So you're required to bring a lower down payment. Then that kind of funds that should have gone towards the down payment can go towards that appraisal gap. That's one way to resolve it. But before you get to that step, another thing that we can do is something called an ROV. So this is another big question. Can I ask the appraiser to correct what they've done, or can I argue against it? Yes, you can. So with a conventional loan product, the process is just called a reconsideration of value, ROV for short. And that means that your agent is going to provide comps and data and intel to the appraiser for their consideration. Do they have to change their mind? No, they don't. In most cases, if this happens, the appraiser is going to at least consider it and then decide if the information that's been provided can work in conjunction to what they have, and then they'll come up with a new value. If you're using a VA loan, this process is called Tidewater. So typically, if an appraiser feels like the home is not going to appraise, they will invoke Tidewater and give both parties a 72-hour window, essentially, to bring new comps to the table to try to see if they can make up that gap. So keep in mind, guys, if the home doesn't appraise, no, that is not the final thing. Yes, you still have the opportunity to actually argue your case. So another big one is, will I receive a copy of the appraisal? Yes, you are actually guaranteed to receive a copy of the appraisal before the home closes. And that's actually really great information to keep on file. If you have any additional questions about an appraisal, the appraisal process, or just kind of what that encompasses and how you can best prepare for that, please feel free to drop those questions in the comments below or reach out to us with the contact information you see in the bottom of this episode. I'm Laura Richardson with Relevate, and we will see you next time.